Okay, everyone. Thanks for coming on a Sunday after a pretty busy week. We have a long list of reviews. This is our Sunday meeting. It is 7 a.m. Pacific, so it's 10 a.m. Eastern. I broke it up into 4 different videos. It's going to be 166 stickers, probably a little bit more because people ask here live. If this is the first time joining, welcome. If this is your live review, if you're here, thanks for waking up early. If you're watching at home, enjoy. All right, you can fast forward. They are alphabetically ordered. This way you can skip through the tickers you don't want to see in the 4 videos. Okay, now we are talking probably starting with Apple, but first I usually look at the S&P and see if we can get an idea. I will do the video tonight, so if you're members, you will get the detailed video tonight. The bottom line is last week the bulls got jarred with this massive drop, but that's because we haven't been used to red ticks anymore. 1 second. And yes, the psyche is that buy, right? Everybody is not looking for any red ticks, so when a few come and violent ones, then we all freak out. In reality, nothing major happened except just a few red ticks when they were not expected. There was a reversal of about 2% one day. So if we go to a 1 week look at it, it looks like a disaster, but we have had probably 21 weeks with one real red candle. So we can afford a red week, right? So if we go to the QQQ, it's the one that was most vulnerable beforehand, and now they're about on equal footing from that perspective. More on that later tonight, and the IWM is looking to break out. So the indices, we'll look at the DIA. So the indices are still, for all intents and purposes, at all-time highs. Any red ticks should be tolerated and not to see as, okay, this is the top. We may be seeing a top forming, but we are not yet ready to call a top. We are on top watch. All right, so here's what we're going to do. We're going to run through all these stickers one by one. I will have a strategy video later tonight for the members. Okay. Apple is the first, almost always. Let's go there. And you know my opinion on Apple. It's been in the hands of the sellers for weeks, and Apple has lost a couple of levels that are important. This being the major one, somewhere around 180, nice round number, and then the other one somewhere around 175. I'm rounding. It's a little bit different than 175, but that'll be good enough. So I had a target that was met, a secondary target that was met, and the actual target is down in the 160s, if not high 150s. I don't think it'll go there alone. In fact, it may be the fuel to the next fire. So if the S&P actually makes another leg higher, maybe this guy will be the fuel. Why? Because it has so much potential just to recover. If Apple goes from point A to point B, the neckline, it will help the stock. It is still the second largest constituent of the S&P behind Microsoft. So, and if Apple loses last week's lows, it would be in danger of triggering 167 or 168. Loss of 168 will almost guarantee you at least half this drop. So 164, if not the low 160s. So that's the story on Apple. If I'm an investor, I could nibble, but I would not go all in. Selling puts to own shares would be better. Buying a in the money or out the money call or call spread would be better. The spread can be calendar, diagonal, whatever. Reach out if you need details on that one. Okay, on ABBV, it was on my watch of having lost enough that would be interesting that it's falling into support. It does have support around 166, and it's a zone, so it's not like a hard floor. In fact, if it bounces like it is and it finds resistance, if it finds resistance at 174 and 173, which is pretty likely, and harder resistance at 176 or higher, it's in danger of curling back down. So it could, this bounce could find sellers here or here. And let's say it curls back down and you lose this zone, the downside will be down in the below 160. That is not a forecast, it's just a caution. It is in the hands of the buyers. This rally was too fast. If we zoom out, let's see what's there. Yeah. So the breakout played out well. How much pressure is it going to be able to apply on the bears to pop back to up to the all-time highs again, or not all-time highs, recent highs. So it does have support. The time to panic big time is gone. If I'm holding calls and I'm really red, I would want to resituate them in a place where they have better odds. If I own shares, I wouldn't do anything. I would not add. If I wanted to own shares, I would probably sell puts to own shares much lower and out in time. This will get me long and leave room for error. Abbott Labs. Okay, so what we said would happen happened. You see that curl that I must have drawn last time? And here, I'll go back to the daily. They bounced off of this support and we drew resistance, and it was exactly where they failed. This is pretty amazing. And now they're curling back down. And see, is that what I just said about this ticker? That it would curl back down and make a lower low? This one right there. See that blue box right here is what I'm saying. Whoops. What I'm saying here. Not a forecast, but now if, that's a big if, I'll put an alert. If they lose 109, they're in danger of coming to the low 100s. That's all that's saying. It looks like a head and shoulder-ish. I don't like it to be called that because it's not quite orderly, but it is that. So if you lose 109, you're most likely going to get to the low 100s. These are technical comments. The fundamentals, you should study the company and decide when the earnings are going to, 10 days until earnings. Interesting. Okay, so be careful. The earnings are crazy. Reactions. Accenture, same concept as this one. The chart looks nearly identical. So Accenture needs a bounce and cannot lose 329, because if it does, it's in danger of going to the low 300s. And that would not be too crazy. Now, I know it's a good company. The P&L is pretty good. It's okay. And so it becomes... earnings are not, it's just reported earnings, so I know that's not going to be a catalyst. It does have support in the 320s, 21, 22. But if you lose 329, you're going for a ride lower. I would not add too longs. I would catch the falling knife, but I'm not sure that's the time. Adobe, I would not catch the falling knife because all these blue lines are prior support and now they're above us, so they're going to be a problem. And it's struggling to hold that level. You see, the last three charts have had a big bounce from not too long ago, and they're trying to hold on to it from the middle of March. That's not a good sign. However, technically, Adobe can rally to 520. So if I'm long from here and I took it for that, then I would hold on to it, but I would exit into 520. If you see here, comments, the white line up at 562. Once they lost it, this was the arrow target, and they exceeded this target. Potential target of 560. No, of 560 loss. So when we drew this line, we said this is the target, and there it is. But there is a lower target, and you have a bunch of volume support right here. But a little lower, you don't. These two boxes. Easy come, easy go. Have you heard the term? Well, this was too easy. So it does not make for a good support zone. What am I saying? I'm saying that Adobe is at risk of going much lower, even if it just bounces like this. I would not add to longs. In fact, I would not touch it here at the risk of missing out. It will rally. It can rally if the markets rally, but if the markets hiccup, this one is going down fast. It has the opportunity to. ADM, there's an acronym we know, and nope, and not an obvious point of entry. This isn't. Huge rally, couple of vacuums. So what is up with this ticker? The gap from here to here, that was the place to get in, from 68 down to in the low 50s. That was an opportunity for somebody that knew the stock, but I would not touch it up here. Too many questions for me. Technically, this was a massive neckline that they lost, and they lost in a big way. And look left, there's a whole bunch of junk. So maybe it gets to 68, but for me, it's not worth my money, my risk. Ally, the old GMAC bank. I say it that way to get myself away from stocks like that. Too many questions, too much violence for not too much violence in the P&L. In other words, why is the stock doing this kind of deal when the P&L is pretty stable? You know, risk reward, they're not paying me in the premiums that they sell if I was to sell options for this kind of volatility. This is ridiculous, absolutely ridiculous. I would not touch the stock to trade. If you're an investor, that's a different story. So you've had an extreme high and an extreme low, and somewhere in the middle lied the truth, and now they're closer to the extreme high than the low. This here is not an obvious point of entry. Also, banks have been in the stratosphere, and I mean it. So the XLF has a bearish pattern on it. So if the XLF falls, this one's going to fall too. The easiest way I'd say it is, if I'm not long, this is not where I'd get started. That's about it. Applied materials. So I'm going fast because we have 166 tickers to cover. This is going to be a longie. Pull up a chair and get some snacks. Okay. Not taking tickers on the fly today, for sure. We have too many tickers. We'll be here for 3 hours. Applied materials, pretty choppy chart. You see all these vacuum holes here. That means if, and I don't know that it will, but if it loses 197, the trip down to 175 would be pretty quick. And it has a lot of resistance. Now the resistance is opportunity to break out, but think about it. Markets have never been this high, and this one is also at recent highs. I don't know if that's an all-time high, but it's pretty high. So entry points, no. If I'm long, I would trim, lock, sell some covered calls. I wouldn't want to just stay long just because. So if I go to a weekly chart, yeah, this is an all-time high. So it's easier to come down than to rally, at least the middle of 170s for me personally. I personally, if it was my money, I wouldn't touch it but above 165 as an investment. As a trade, plenty of trading to do. Get long into 198 with an immediate stop, get short into 212 with an immediate stop. That's the trading comment. Okay. AMD, when I say get short, for those who don't know me, I don't mean selling the stock short. I mean either selling a call spread. Maybe you can convince me to sell a call if I know it, or buying a put or a put spread or a combination. Applied materials, 1 + 1 = 6. You guys have heard me say that. What does that mean? So AMD is not NVIDIA. NVIDIA announced that it will be making a lot more money with AI, and it is a lot more money, doubled their income, tripled their net. And this one rallied with it, but only because it's a friend, not because it also improved. So it needs to tell us, the CEO needs to come out with a headline either. 1 second. They need to tell us how they are going to be like NVIDIA or not. So until then, I think this one is a no touch for me, because it's either going to spike to high heaven, but it's already pretty high, or come crashing down like a brick. So good company. It's the expectations of what's built into the stock price. So that is my concern. Good company, but the stock might be vulnerable to this headline. The headline may be good, may be bad. I feel like I'm flipping a coin. So how do I trade this? I don't. If it's rallying, the market is rallying, it's easier to be long the market. That's the easiest way I can say it. At least maybe the SMH, but even that is going to trade pretty closely with it. All right, so Amazon is trying to recover old glory. So most definitely, when a stock goes into a prior fail, my knee-jerk reaction is to short it. So how about I say it this way? There's a good chance Amazon is below 160 in the next couple of months. So if that's the case, then why do I want to get in at 185? It could go to 195. It could. It's going to have to do it without me. In fact, if it goes to 200 or 196, I will try a put or sell a call and a call spread to buy a put spread. We're going to go into earnings soon. So in a couple of weeks, maybe 3 weeks, I think Netflix and Tesla will start to report, and then thereafter, in the next couple of weeks, all the mega caps will report. So they will have to tell a really good story. They, as in all of them. We have built up so much since when we called the bottom back in October of 2022. We've gone miles, right? So it's the how much hopium is built in here. 126% rally, even from just this year, last year, sorry, October of last year as well, 50%. Technically, there are this red W and these green lines. They say, oh, we could be headed into a dip. It wouldn't be a crash. It would just be a resetting of the baseline. That's it. Sorry, having a conversation over here. Arista Network, good stock. We've caught the dips a couple of times. And let me zoom out to see where it's at. Oof. Yep. Too hot for me. So this is where I say TH. It's too high to chase and too hot to short kind of a deal. And we have a lot of those stocks. How about a small dip into 275, 276, 280 or lower? Maybe it'll be more attractive. At least come back into that red line, which is a heavy volume, which should provide short-term support. And I emphasize short-term. Now, if you lose to 84, you will get that 270s, 272. If you lose 272, you will get 258, 260. You see how it happens? So you have catalysts above and catalysts below. If I buy a call, I'm guessing. If I buy a put, I'm guessing. So if I'm an investor, there's nothing to do here. If I'm long, I would sell cover calls. If you don't know how that's done, ask me during the day. Abercrombie, I want to short it again. I shorted and lost, but it did now what I was expecting, so my timing was a little off. This thing should come crashing down. The stock chart looks like NVIDIA, and the P&L looks nothing like NVIDIA. But I wouldn't short it. I wouldn't touch it. It has support at 113. If it loses 113, I think it starts a descent that would be just as fast or disappointing to the bulls as it was as the ascent was to the bears. You do have support, but if you lose again 115, looking at it closer, 115 might be. You have one tick at 113.65. I remember that tick. You have immediately, if you lose 119, you might tackle these and then some. Loss of 119 target is lower than this support zone. So tag teaming bears, if they don't bounce this week, they will have tag teaming bears. That's my statement. 102, good support there. I don't know APO. Who is this? Apollo. Yep. How many stocks do I have to say? It's too high for me. I mean, what is happening here? What the hell kind of P&L is this? What is going on? What is Apollo? An investment company. Yeah. Well, you better study it well because the chart says nothing. It says up, up, and away. We love it. That's what it says. So study the company. The chart's not going to help you out at all. I'm trying to get any clues. You have catalyst and resistance, of course, at the all-time high. You do have a line of support into 108. APPN, oh my gosh. How many tickers are we going to say the same thing to? Folks, for those of you who are asking me, if you're submitting a chart that looks like this, I would love to know what are you asking. I'll go through the list of questions later if I have time. Like, what are you asking? Are you asking permission to start long? You will get my answer to every stock chart that looks like that. Not for me, not for a million years. Not one time in my life would I ever be tempted to buy a chart up here. If you're a momentum investor, if you're a momentum trader, that's a different story. Buy high, sell higher, I get it. But if you're an investor looking to enter a stock up here, nope. If you're looking to book profits, you have my blank permission to book profits. You wouldn't be crazy. Support, 68. What, that wasn't APN. Who is this? Advanced Apollo. Anyway, APPN. Somehow I didn't. So what is APP and APO? Are they the same? Aplovin. Okay, never mind. They look like the same on the CHTRWYs. All right, so we're talking APN. We said it could dip, and it did. And let's see if they can curl back up. I don't think they should. From a chart perspective, it's easier to come back down and test 35. And it does have support. That arrow, forget about it. That's like 3 steps ahead. I don't remember these comments, but this red W you see on, we have 2 of them. Target 1 has been met. Target 2 is about 35. and there should be support, 35 to 34. And if that's lost, target 3 is below 31, but that's not the conversation. The conversation is what happens at the resistance at 39.5. And if they curl back down and the market trips up a little bit, you can find yourself at 34. If you're looking to short all these stocks, it is easy to short them when they're that high, but it's easier to short the market because then you avoid single stock headlines. So Asana, I said it would be okay to start longs. I said half a position in stock. And if somebody did that, then there's nothing to do here. The other half would be if it gets cut in half, basically. Not really, but I don't usually add to my position unless I'm down like 30% on shares. And in this case, it's not time for me to add. If I took half my position in shares, I do not add here. I don't know what the market is planning on doing. This P&L is pretty good. I mean, it's a growth company. They spend a little bit more, but it is a speculative bet. So if I'm long, I don't do anything. If I'm long with calls, I would replace them with a position that actually can hold up, can stand the test of time. If I'm looking to get long, personally, I would sell puts to own shares from here. Okay, so this is Broadcom, pretty good company. We discussed it last week live. I remember that. 1K call. Okay. Oh, that was a conversation of what would I do if I was an investor in Broadcom. I would sell a put, sell a call type of a deal, like sell a strangle. But I don't recommend that to anybody that doesn't know what they're doing. It does have a lot of support below. And if for whacked out reason you lose 1200, you will go much, much lower quickly. So on Friday, I remember I got a beep that it's going to 1200 because of that little poke lower. So we'll see how this week is going to handle that. It does have support. If it loses 1300, I think down to 1200 would be very easy. And a breakout from 1400, it's got unlimited potential, but I'm not sure that that would be where I would go. So be careful with Broadcom. Good company. Look at the P&L. It's almost fake. It's so good. So be careful when it's that. I mean, what else can happen great to bring in more buyers? All right. Boeing, I am long and short. I'm long by sold puts and short several times by sold calls, and I roll them down. So I will be closing this position in the next few weeks. There's nothing to do here. It seems to be a headline stock. The media is, like for a while, was assaulting it. If you're on Instagram, you see all these stories about, which are fake, about some planes catching fire in the middle of the air or whatever. So be careful what you believe. And solid support through 175. And if you lose that, I don't know, 140. But I don't think it does that alone. It has no competition. There are two companies that do what they do in the whole world, and the whole world still needs planes. So both companies will have the opportunity to sell all the airplanes they can make. So it's a matter of deliveries. And maybe the bad short-term headlines have worked their course. Solid support at 176, 175. You lose that, we'll have another conversation. So I am long and short, and I'm looking to close my position. I don't want to be in a position through earnings, which is in about 17 days. Fundamentally, it does not have a sales problem, right? They have a throughput problem and a headline problem. Okay. Baba, I don't trade Chinese companies anymore just because there are so many headlines I don't know anything about that are coming out of there, but it looks like it's stabilizing at 70. Now I'm going to say something. If for whatever reason it loses 69, I would exit the stock completely because I cannot tell you how low it goes. It could be $1, it could be $10, it could be $20. And we should remember that it's in a place that is not friendly to business. So we don't know I don't know the internals of the environment where it's at. So the company P&L is not help. And this is a company that makes more money in one day than all companies that exist on 11/11. So solid support, I would avoid it completely if it loses support. Opportunity, maybe above 78, it catches a bid. Technically, it's a bit of a pickle here. Baxter International. All right, so here we have a battle of higher lows and lower highs. And the range went from this wide to pinpoint. So above 44, you can get to 48. That's a technical comment. And below 41, I would say, you have strong buyer. So you have a lot of buyers here. So it looks easier to break out of 44 than to come back down to 39, say. So from that perspective, you have better support than resistance. So if I'm long, I would stay long. That's the higher time frame conversation. Now, if you wanted to get into the nitty gritty, it looks about equal. Like, how hard is it to break out of here? It looks pretty hard, here being 44 and change. And how hard is it to lose the support below? It looks pretty hard. So it's kind of stuck. Nothing to do. If I'm long, I don't add. I don't know what the BC is. Brunswick. Bearish setup. If they don't go above 97, I think they're going to 89. BIDU, same comments as Baba. You've seen my markings from before. Good support, you want to hold it. If you lose 97, you go to 90, maybe 88. Meanwhile, you have an opportunity. If you break out of last week's highs, maybe you can challenge 111 and get to 114. I think 115 and 115.5 is going to be a bit. What is it going to take them out of 116? I think a miracle. So you're kind of stuck between a hard buyer and a hard seller. It's going to take a headline to explode through either of those two. Earnings in about 37 days. BMY, wow, are you kidding me? Check out this forecast and reality. Dip, rally, dip. We're here in this reality. So, whoa. And this is just based on prior price action, I believe. I don't know where I ripped it from. Looks right here. No, that's the third repeat. Okay. So that's the third time this pattern repeats itself. So what am I saying? You're in support. You might have a little bit of more downside. Once they stabilize inside the support zone, they're likely to come up. So if I'm long, I don't get out. If I'm looking to get long, I make it a trade. I get in with a stop loss. If I'm an investor, I mean, it's an okay place to start. I wouldn't go all in. Just leave room to add later. Shares would be better than calls. Selling puts to own shares would also be better. Okay, BN. Brookfield. Good support below, a lot of resistance above. I wouldn't touch it. Because if I guess up, I'm guessing. And if I guess down, I'm guessing. So technically, there's not a lot of clues except that it's stuck between buyers and sellers. P&L looks pretty good. So if I'm an investor, I don't do anything. Okay, thanks. Blackstone, I would think the upside is going to be struggling. On the upside, I think it's easier to give back. So even though it got arrow 1 for us and arrow 2, arrow 3 is somewhere inside of here, but now it's going to take it a lot to come down to there. So first step is not to lose last week's low. If you lose last week's low, which is 124, I think you will lose the support and come down in this box over the next 2 to 3 weeks. Yeah, it has a catalyst above, but I think it's pretty hard. So be careful being long. You do have earnings in 11 days. Maybe they surprise us with a good reaction. CCL. Let's see here. I said that this is what would happen, and this is exactly what's happening. Is going inside the bowl. Double tap on the bottom of the bowl. So I don't know about this. The bowl is starting well. I would not put money in it for this upside. So I want to be on the record that I don't think that is a good opportunity to hold for that. In fact, if you lose this low of 14.4, you're probably going to go to 12. I wouldn't short it, but if I'm holding calls, I better have enough time on them so they don't go rotten. It is still doable, and that was the plan. Buy the dip, and the dip played out. Somebody that bought the dip may have made money or is not losing money unless the calls are running out of time. So make sure you have appropriate calls. CF Industries, although it looks like a breakout waiting to happen, and it is, so above 87, I think they will beat the prior high that we see on the screen. Otherwise, the trading comment would be to buy the dip into the solid support, to curl back. So somebody long, I get it, and somebody looking to get long, you should know that you could make sure that your long could withstand a small dip. Citizens Group. Playing out, it's inside of a target zone of 33.50. So now if it bounces, it could curl back down, because I think this is going to be a resistance area. And the bounce is probably going to come back and test this and come back and finish this job. But I think if it gets to 33 or 32, I think it goes a little bit lower than that. So it looks a little bearish here. This one, it looks very bearish. I would not touch it. I thought about it. It was in my watch list for a couple of weeks, maybe 3 weeks, and now I decided I don't want to touch it. As long as it's below 310, it could go to 200 for all I know. I have no idea why Wall Street hates it so much, so I don't want to find out. Technically, it's horrific right now. They need to come back to 340, 320, 340 to avoid this blue line. As long as you're below the blue line, anything is possible, maybe even under 100 over the next 6 months. I'm not sure. I have no idea. The P&L doesn't look alarming, but technically it is. Wow, it's pretty scary. So CHWY, I said to buy shares. I don't remember where. I know it went lower than when I said to get long. Some of you saw the message as buy shares or buy calls, and some of you chose to buy calls instead. That is doable. So if I bought calls and I went red and now I'm back to green or flat or slightly red, I would exit and replace it with a trade that can withstand the time. So this P&L was pretty good. And the rhetoric was horrible. And it was a lie. And they're selling rallies still. Look, rally, sold, lower low. Rally, sold, lower low. This is a rally. They will try to sell it. They did. So there is a good chance it gets to 18. But it is a bearish setup because it's going into 18-ish, 17 to 18 is the place where they're trying to recover, technically. Okay, so there should be sellers here, a lot of sellers. How low do they go? Last week they went to 16. If they can hold that and make a higher high, that would be huge progress. Good investment over the long term. I don't add to longs. If I was trading and I took a long and now it's gotten better, I would exit. Cigna, yeah, THTH, nothing to do here. It's too high to chase and too hot to short. I'm not sure what you're asking. If you're looking to book, yeah, I would book. Comcast, always tempted to trade Comcast. I will never trade it again because it's just too violent. The P&L is pretty stable and the stock trades like it's Tesla. Like what's this and that and all of this. So technically, you're in danger of getting to 38. And if it does, anywhere inside this zone, anywhere below 39 should have a strong buyer at least one time. Getting above 43.50, I think is going to be very difficult. But 43.50 or higher, it could get to 47. So you're stuck between a pretty solid seller and an unbelievable buyer. What to do? Nothing right now. CMG. They're taking price because of the labor. They're increasing labor for all fast food places, I think, up to $20 an hour or something like that. And these guys decided they want to actually take price. In restaurant speak, that means they want to raise their prices. Usually that hits the visitors. It hits the P&L right the first time, but then you start losing visitors because somebody that suddenly figures out, oh my gosh, I'm paying so much for my meals there, they go less frequently. I got to tell you something. This restaurant operator is head and shoulders above all others. And I know that because I used to do FP&A for restaurants. So I know what I'm talking about. Their ability to generate comps is unbelievable. Now, technically, this stock better not lose 28.40 because it probably goes to 2700 or 2720 fast. Okay. I wouldn't short it. And it's very tricky to trade with options. I don't touch the stock. I used to trade it. The only way I would consider trading it is by selling naked puts way out in time. But $2,500 stock, you better have a giant account for that. Okay. CMS energy. I don't know what kind of energy it is. Is it solar? What? Electric, utility, gas, North Star. Okay, clean energy. Technically, you have a bunch of sellers. So there's no reason for me to go long here, except the fact that we have a bunch of buyers. So what am I doing? I'm just owning a stock. If it's a dividend play, then do your homework on whether it's stable enough for that. The chart is not going to help you. You need to study the company. There are not a lot of clues here. A lot of support and a lot of resistance. So might be stuck here for a bit. I would not trade coin. I mean, I would not invest in coin. I would trade coin. Why not? This company, along with all other crypto companies, it's like oil companies to a degree, only worse. Their entire future is tied to a price of something that they do not control, and in this case, something very volatile that they do not control. Remember, it went from Bitcoin from 65,000 down to what, 8,000. What will happen to coin stock if it does that again? So that's why I wouldn't invest in coin up here. I'm a believer in crypto. You know my story, right? We crushed it. And if crypto crashes again, this would be a company I would invest in. I wouldn't short it. Technically, 235 needs to hold. If you lose it, you're going to test support at 215. If you lose that, you're going to get to 180. That is a guarantee. Conversely, you do have the same catalyst on the way up. I would bet on the way down easier than the way up. What does that mean? If you twist my arm, I would buy a put spread in it or sell a call spread. I wouldn't, but if you twist my arm, that would be my guess. I think it's vulnerable to the downside more than the upside. And I'm holding long crypto, a core position. I booked most of my profits, but so you know I'm not a hater. Earnings in 31 days. CRSP, it's on my to go long list as a trade. It's falling into a base that should provide support for a spike. I don't know anything about the business. This chart, in fact, the business looks pretty horrific. It's a story of future success. So this is a chart comment. As a chart, it might bounce. Okay, so as a trade, I would be long, but you have to know what kind of long you'd be in. CrowdStrike, good company. I would catch the fall in on headlines as we have. I believe this one and that one, we were online when they happened and we went long. One of them, I didn't even have time to write it up. Now, it is pretty high as far as investment. I'm talking trading of a good stock. The P&L is pretty good. And I don't know much about the business internals, but if I can trust their financials, it's a good stock. Hard buyer into 290, that one candle. Another hard buyer into 270, that one candle. But all of this is weak stuff. If you look left, there's no volume. So I can't tell you how it falls, but it could fall very, very fast. So what am I saying? If I'm an investor and I'm already long, I would not add. I would not add until it comes down to 220-ish. Maybe it does, maybe it doesn't, but I'm not taking that risk. If I'm long, that should be plenty good. In fact, I would insist on, if it was my family member, for them to sell calls. And selling calls against shares, that means selling covered calls to put them to work. Build some protection. Cisco, dinosaur, it survived the .com. That green box is the earning box, which means they've had violent reaction inside of that. So that's the line that I wouldn't go long into, and that's the line I wouldn't go short into. You understand what I'm saying? Ping pong inside this box. And there's a smaller box between 50 and 47. Okay, you have temporary support, and you have a lot of resistance. If you lose 47, I think you go to 44. It's a good company, needless to say. CVS, violent reaction last week to some headlines from Medicare or Medicaid, I don't know which one. So now you're struggling to hold support, and support is pretty good. Look at this candle, look at this candle. So we have buyers into 70. Below that, I don't know. There should be more buyers, but it looks heavy, right? So they're selling rallies. On the next pop, if I'm long, I'm out. If you want to be long here for a pop, that's fine, but you should know that it's equally as possible to drop too. 24 days until the next earnings report. I think 76.5 is a lot of resistance. Caesars. We have a huge battle of lower highs. Those are the sellers. Higher lows, those are the buyers, and they're coming to blows at 44.50. If you can get to 45, you can probably get a couple more dollars. And you do have a bunch of buyers below. So you have enough support to come up and tackle this. Earnings in 23 days. You should do research as to what other companies that look like it are reporting, like Wyndham or whatever. If any other hotel, casino is reporting they might move in sympathy. So make sure you have their entire calendar and their competition. Okay, so we have one video done here.